Welcome to your Mortgage Insider update for Election Day, November the 5th. So we're going to start the day off with a lock alert actually coming out 3 days in a row of jitters in the market. We were up pretty significantly Friday, settled down yesterday, and then back up today. So hovering around one of the highest levels since mid-July as we await the election results, as well as the Federal Reserve meeting will conclude on Thursday this week, which will ultimately set the pace for the future of interest rates. It is expected for a 0.25% cut from the federal funds rate. This is after not a stellar jobs report, but a strong enough jobs report to hold the market higher. Today, the ISM Retail Services report showed strength, a little bit less strength than last month, but still strength higher than what was expected, just leading into these election day jitters. So let's take a look. So starting the 10-year Treasury off up 6 basis points. This is right off pretty much a 6 basis point drop yesterday at 4.36%. Quite a bit higher than we want to see, but this ahead of pretty major events coming up this week with the presidential election should conclude, as well as the Federal Reserve meeting concluding on Thursday. We'll set the pace going forward and see if this is a high point. So since Friday, we can see October 31st into November 1st, pretty big spike in the 10-year, pretty significant drop and kind of settling down yesterday, and then just moving right back up as we await the results of the election. Brings us back to rates that we had broken below actually in early July and hesitated and hovered in this area here in the early to mid-July before we really started to have the economy seem to be slowing down, jobs seem to be slowing, and now we see in just this last month the stair step higher. If this is a roller coaster ride, let's just hope it's the peak. So get out the vote on Election Day, and we'll come back with you next week. And a pretty big update as we conclude the Federal Reserve meeting and the projection forward on where we can expect the rates to continue to either stay elevated, or can they potentially come down and give us an end of the year Christmas present. Have a great day.